Ahoy there, traders. How are we doing? If you're wondering if you're in the right place, if you're looking for swing trading and charts and stock market stuff, then you're in the right place. So stay tuned. A quick roll call. Who's here? Adrian, Bal, Ian, Linda, Mark, Peter, Ralph. Hello. Ruben, hope your back's better. The medicine went down a treat, by the way. Steve, Scott, Vito, hello. Just one or two people just coming in as we can, as I can see more specifically. Right, so what have you been trading this week? What stocks have you been looking at? Let's just get a little bit of a discussion going. What's on your radar for, or what has been either for this week or what's going to be for next week? So what have you been looking at? While you're doing that, I shall just let some of the new people know what to expect. So the agenda, typically we're going to be here for about 60 minutes. I'm going to spend two or three of those minutes just letting you know who I am, just for the new traders more specifically. I'm going to look at the stock market, we're going to look for the setups. There's going to be a little bit of a narrative today. I'm going to very quickly and briefly just look at trend lines made simple. As with most things, we all overcomplicate things. Trend lines is one of those things. They can be subjective. I don't use them that often. But when I do, there's a very specific way that I do it. So that's what we're going to look at. It's super simple. It's not time consuming, which is really the core theme around everything that I do. I don't want to spend hours analyzing the charts, specifically putting thousands of lines on the chart just without reason. So we'll take a look at that. Peter, I've seen you, Scott, your stock choice. So we'll take a look at that later as well. Now then, how to get maximum value out of today's session. Interact, comment, like, share. If you've got something about the stocks and the stock markets that you want to know, if it's relevant, I'll answer it pretty much immediately. Again, if you've got a question, pop it in the comment box and we'll take it from there. So who am I? Phil Newton. I'm just a regular guy. I'm nothing special other than the fact that I have cracked the code on this stock market thing. For the last 25 plus years, I've been helping regular people become successful traders and get results. And again, I'm not a Wall Street guru. I am just a regular guy who's just figured a few things out. Been very fortunate in my time to get into the stock market and trading in my mid-teens. So I was quite young and made it quite successful. Specifically, what I do these days is production line trading. I want it for me first. I want a systematic approach to find, filter, and sort stocks that's methodical. There's as little discretion as possible. Everything's rule-based, rule-driven, and there is essentially a decision tree behind what I like to do. And again, the primary motivation for that is I've got Crohn's disease. Like, there's lots of times where I'm not well. A few of those instances have been recently. I don't get any warning about it. Or if it's going to happen. So I need a process that means that I'm ensuring that I'm pressing the right buttons at the right time on the right stocks. So I want it for me first. It turns out that each and every one of you get to reap the benefits of the work and hard work that I've done over the years. Anyway, from here on out, I am going to be, or attempt to be, your swing trading mentor. Every Friday, I like to try and give back as much as possible. And for anyone who knows me, I do give a lot away in these sessions in the short amount of time that we do have together. Just like I've helped Steve, Anik, Joe, Kyle, Colin, and quite literally hundreds, if not thousands of people with my programs and systems over the years to plug into my production line trading. I like to have fun. I like a good read, a ramble. My mornings are typically spent urban rambling, going around, exploring my local area. I like to work out. I like a coffee along the way. I actually hate running despite working out. I've got a weird affinity for flamingos. I don't know why. The crazy little buggers, there's just something about them. I like to enjoy myself. I like to have fun. It's all because of the stock market trading. It has and is my primary source of income. And again, this week's adventures have been at Lyme Park. I went to Dunham Massey, even, spelling it wrong. Just went on a little bit of a deer ramble. This is local to where I am. Wonderful location. And the autumn leaves are really coming in. And again, it's all because I managed to crack the code. It was out of necessity through illness. I had I was unemployable back in 2001, 2002, housebound in my own personal lockdown for 3 years. So I had to make something work. And for me, I had already started that journey of the stock market. So for me personally, I was forced into, I've got nothing else to lose. I've got nothing else to do. So I might as well give it a go. I took £1,000 as I live in the UK. Up to £92,500 and change in about 8 months, and that was when I realised I think I'm onto something. So I figured it out very quickly because I had no other choices. I had bills to pay, foods to put on the table, just like everyone else. And I suppose just when you've got lack of choices, you're kind of forced into making not necessarily irrational choices, but like, what's the worst that could happen? You know what I mean? It's that type of thing. Like most people, you get held back for fear of it not working. What are you going to do? And when you've had some, and we've all experienced this in the last 12, 15 months because of, obvious reasons. But most people would never have previously related to that. Something shitty and something weird's happening. What's the worst that could happen? Well, the whole world has just gone through a what's the worst that could happen experience. Comparatively, what is the worst that could happen? Like, you've used a few quid on the stock market, you've given it your best shots, you've realized it's not for you. Maybe there's something else you want to do. Maybe you want to start a business. I don't know. But you've given it your best shot. And that's the whole point of this. But what I'm also proposing is that you follow in the footsteps of someone who's already done it. There's a lot of good coaches. There's a lot of good coaches and mentors out there. And it's not that one's better than the other. It's that they all do something a little bit different. And I've never tried to blow wind in anyone's sails that what we do is easy. But what does make it difficult is figuring out the right method for you, the right person to help you along your journey. And I always promise people, I'll always point you in the right direction, even if what I do is not right for you. A quick illustration of what that means to me, finding the personality of a trader is one thing. And again, what that for me means is if you've not got the time to day trade, there is very little point in learning how to day trade. It doesn't matter how good the strategy is, how good the mentor is. If you can't physically, practically day trade because of the day job, I don't know what your situation is, then there is no point learning. No point learning whatsoever, because it's just impractical. It would make it impossible for you to see any type of success. And that's what I mean by the personality of a trader, finding your methodology, your trading style. And it's not that day trading doesn't work. It's just that it doesn't currently work for you because of your situation. Now, I spent 12 years doing it. It does work. I can testify it. This time last year, we spent 8 months doing the day trading thing, the profit at the open. I gave that away for practically free to my community. Anyone could come along and join us. And it does work. It's very profitable. But now that the lockdown's been lifted, certainly where I am, I want to spend less time at the computer. So I like to swing trade. So I'm looking to spend as little time as possible at the desk. I want to plug into a easy system, rule-defined, methodical process so that I can go about my other business. I can go and do something else. And again, because of the situation at the moment, we've got a little bit of a relaxation in the UK. So I can go out and have fun and have the nights out and the days out and the trips away and all that stuff because of swing trading. So hopefully what I'm trying to illustrate is don't confuse it with look how great my life is. I'm having a great time at the moment, so I can't deny it. But at the same time, for some people, just knowing that it's possible to make profits and money from the stock market, so that just gives you hopefully a guiding light to walk towards. It is possible, but the first step is you've got to figure out what's the right method for you and your current situation. So just keep that in mind. And that's usually the best piece of advice that I can give anyone who's starting out. Think about, what time you have available. Again, I like to get paid at the end of the month, at the end of the quarter. I want to spend as little time as doing it. I want rule-based decisions. I don't want to wonder what, when, and why I'm doing something. I want to know all of those things before the trade goes on. And that for me is what production line trading is. Anyway, if you're watching this on the recording, you've got the laundry list of things and accolades. It's not really my thing. I only mention them just to kind of say it's not the first time I've sat at the table doing this, is all I'm saying. I've been doing this for 28 years. I do have multiple businesses. One of those is to actually teach people, despite the fact that I do give a lot away for free on the YouTubes and on these free sessions. If you want to work more closely with me, you have an opportunity to do that. There's no pressure, but it is the fastest path to success, to follow in the footsteps of someone who's already doing it. And if you believe that I'm that person to help you, then we can talk about it. And at the very least, I said, I'll point you off in the right direction. And if it's not right for you, at least you'll be better informed to ask the next person that you're looking for help from. You'll be able to ask smarter, more informed questions. Anyway, what I do is production line trading. I want to methodically and mechanically evaluate, what am I looking at today? What is the best opportunity for me to trade? And that's what I want to do. Then I want to confirm, should I be trading? It's a visual confirmation. These two things go hand in hand. The first step really is the secret sauce, the secret ingredients. I'm not looking at every stock every day, all of the time. All of these scanners and tools and resources and even strategies. I had to look at an alternative software, because despite my long-term use of my preferred software choice, which is TradeStation, I always jokingly say, welcome to the 90s. It's a little bit clunky. It's a little bit stodgy. There is better technology out there, but then I've tried a few recently and they're absolutely fucking awful. They really are. They don't do what I want to do, which is to make this mechanical assessment streamlined. Some of the backtesting software is awesome, but TradeStation still has it for me. And again, I've tried a few recently and they're absolutely awful. So I would urge people to find a tool that makes sense. And what I want to do is be able to do a lot of the heavy lifting in a watch list or a scanner. Again, don't fall into the trap of scanning every stock every day, all of the time. There's 28,000 stocks in the US market alone. And you don't need to look at all of them. I'm not trading penny stocks. I'm not trading junk stocks. I'm not trading pink sheets. I'm not trading stocks that don't have options, because I know I'm going to trade with an option. So when you kind of think about what you don't want to trade, it leaves you with a very small list of things that you can trade. I want to trade liquid stocks that have an average of 1 million shares traded. And this is this mechanical assessment step. And even before we go and look at a chart, I'm making sure that I look at the right stocks for my strategy, which is to swing trade. For example, Pepsi-Cola, probably a great stock, got great dividends. It doesn't swing very well. It's been flatlined, even with the huge sell-off back in March. Even with that, it's barely moved over multiple decades. It might be a great stock for dividend trading. I don't trade dividends. And that's just tying back into my previous comments of, like, you've got to have at least some understanding of what you're looking for from the stock market. What's your destination? I want to profit at the end of the month, the end of the quarter, from price movements, price fluctuations, swing trading. I want to do that in the most efficient possible way. And it starts with making sure that I'm firstly looking at the right stocks. Then when I am scanning for opportunities, I know that the opportunities that I'm looking for should be higher expectation, higher probability. Then I can move on to the second step, which is, okay, if I'm looking for the average prices, the moving averages to be crossed over in a certain way, we'll look at that in a moment. All the old hats that join me every week will already know what that looks like. But if you're scanning for that in the watch list, just because the average prices have crossed up a bullish crossover, it doesn't mean that it's an automatic buy signal. And this is the mistake that a lot of traders make. The indicators should help support your decisions. They're not making the decisions for you. So we always want to visually confirm, if the average prices are going up, am I seeing an uptrend, a bullish environment? That's what that visual confirmation is, because sometimes the average prices can be crossed over and it's completely flat, the price chart. So we want to make sure that those two things go hand in hand. And it's then and only then that I can go on to the entries, the exits, the stops, the targets, and I can start thinking about planning for trade management, hedging strategies. If the trade is not working out, if it is working out, I want to know where I'm taking profits before I enter the trade. So I know everything I need before the trade goes live. And that gives me confidence. And that's what we're going to explore again today and this week. Take a breath. Trend lines. We're going to look at trend lines made simple. So we've got a question. In fact, let's go back to the little picture. So trend lines, I'm going to just do TLs, where do trend lines fit into the process? We can do mechanical assessments. We can do a visual confirmation. So for example, uptrend. And then I'm going to slot in any discretionary evaluation, because trend lines are discretionary. They are discretionary evaluation because they are subjective. And I'm going to try and give you a system shortly to systematize your application of trend lines. But ultimately, they're discretionary, which means that it's difficult for everyone to replicate it. So it's optional. We spoke about it in my accelerator group this week. So to make sure that everyone was looking at it, I thought it'd be a good opportunity today to just explore them again for everyone else. But they're not essential to what I'm doing. They're not critical to what I'm doing. They're going to enhance what I'm doing. So if you see the opportunity to use them, it's going to enhance the opportunity. So at this, let me just type. So it's at this point here in the process, I've already decided this is a good trade. So I've got the optional extra to add in discretionary analysis. I can add in the Dow theory, the GAN theory, the Elliott wave theory, trend lines. I can add in all those subjective things. Maybe I can apply some Fibonacci, some fractal patterns, whatever bullshit you want to look at. I don't fucking care what you want to use. It is of no consequence whatsoever. The point is if you are going to use it, there's a time and a place. And for years, I was applying discretionary analysis over here on the left, before I'd evaluated that this was firstly a good trade, a good stock, a good opportunity to trade. And I would, like most people, spent hours looking at chart after chart after chart, trying to, doing the bunny fingers behind the camera here, analyze the chart. You'd spend 2 hours trying to look at one chart, trying to figure out where's the trade. And it's a fruitless exercise. So let's figure out first, what should I be trading? Does it conform with one of the 6 money-making patterns that I look for? Yes. Okay, great. Oh, and I see a trend line. Oh, and I've got an Elliott wave. Oh, and I've got a Dow theory, GAN theory, whatever you want to do. This is where it gets inserted into the production line. So you can add and layer on extra things, because each and every one of you brings a little something to the table, that secret blend of herbs and spices. I like price patterns. I like looking for consolidation patterns. I like doing that. I've spent time doing it. It's not critical. So the way that I try and scratch the human urge to, do something a little bit extra, a little bit different, I'm first and foremost going to say, I am going to place this trade. We're all going to place this trade as per the strategy. But maybe my entry, exit, stops, targets are going to be adjusted because of how I view the chart. A good example, we've been looking at Domino's Pizza. Let's just flip to the chart very briefly. Good example is we've been looking at Domino's Pizza, DPZ. And one of the things that we've been looking at is we've got an Elliott wave structure. Again, I know we're going to start with their trend lines. I think I'll show you how to use trend lines in moments, but it just illustrates the, average prices are crossed up is first thing. Visually, I've got a trend. This is retracement in the context of a trend. I'm going to be buying the dip. So step 1 and 2, buy the dip in an uptrend. The average prices are pointing up. Price is confirming that it's going up. Visually, I've inspected. Mechanical assessment, visual inspection. So now I can apply discretion. Is there anything else that I see here? Yes or no? If no, it's not mission critical. I'm going to place the trade when I start looking for my entries, exits, stops, and targets. I'm going to place the trade. It's already been established here, but now optional. Is there anything else that might just influence how I profit from this? So in this case, one of the things that we noted was we had this Elliott wave structure. If you're familiar with Elliott wave, that's great. If you're not, don't worry about it. I'm not here to teach you Elliott wave today. But the point is that it's a discretionary evaluation. And again, you've got lovely market structure on the retracement. For me personally, it was crystal clear. If you're familiar with the pattern, it should be bloody obvious that it's there. And if it's not, and you don't see it, don't worry about it. It's not mission critical. I'm not leading with Elliott wave to find my trades. I'm augmenting my trading choice. So because of the structure, I thought this is a wave 1, this is a wave 2. So this next push is going to be a wave 3. I think we've got to move to $650 from $500. A nice $150 move. That's about 30% increase in the stock's price. And there may be more. We may see Domino's go to $1,000 after it. I could be trading this for the next 15 to 18 months. So I like the look of it. I like it. There's something more than my usual get paid at the end of the month, get paid at the end of the quarter. This has got multiple pay points if what I think is going to happen. End of the month, end of the quarter, end of the year, end of next quarter, end of the quarter after that. I've got multiple opportunities to potentially profit. And this is one of those situational things. When you've got experience, you'll pick it up as you go along. The point I'm trying to get to is it then influenced number 3. It's going to influence my entries, my exits, my stops, my targets. I've got a huge target. I've got a wide stop loss. I've got multiple trade entries with multiple different option strategies to profit from the same trade that I'm going to place anyway. I'm going to place the trade, and just how I go about that, how I maximize the opportunity is what I'm doing. So let me just pause there. Does that kind of influence? I'm not doing anything different when it comes to adding a trend line, a discretion. I'm going to go through trend lines, but hopefully it just illustrates there's a time and a place. And in what I refer to as my production line, it's that juncture. Is there anything else that I see? Yes or no? I'm going to place the trade. Already established. It's just, can I enhance the trading opportunity? And we're going to explore some trend lines so that you can enhance the opportunity in a more structured way using trend lines, should you want to. It's not mission critical. And I think that's the difference, because most people are going to start with the trend line and they're going to do the discretionary elements over here. And they've not really figured out, should I be trading this? Should I even be analyzing this stock in the first place, or this chart or this opportunity? Should this stock even be in my universe? What if it's an absolute donkey for your style of trading? Why are you looking at it? All these things need to be determined before you even think about looking at a chart for a trading opportunity. Let me pause there, which is code for I'm going to just have a quick slurp of my coffee. Is this resonating, folks? Let me just catch where you're at. Does this resonate? Does it make sense? Does everyone understand that there's a distinction between mechanical decisions and discretionary analysis? Most indicators to support decisions could be interpreted as mechanical, which is why a lot of people like them. But things like trend lines, patterns, Dow 3, GAN 3, Elliott wave, blah, 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 they can be discretionary. Cool, cool, cool. I'll take the resounding silence. Absolutely, Zeke. Thank you very much for your kind words. Thank you. So priority 1, mechanical, priority 2, discretionary. Absolutely, yeah. I think as well as Zeke, just to pick up on that, it's going to give you peace of mind. It's going to give you peace of mind. Why is it going to give you peace of mind? So thanks for your comment, Zeke. It's going to give you peace of mind because when you've got that structure and you're at the final, I'm now looking for entries, exits, stops and targets before the trade goes live. I know how I'm going to manage trade if it's going wrong. I know how I'm going to manage trade if it's going right. I'm not looking at discretion most of the time. I'm trying to figure out what, when, why, and how I'm trading it before it goes live, because that helps me sleep at night. That helps me sleep at night. That means that I'm not going to wake up at 3 o'clock in the morning wondering what the stock market's going to do tomorrow. I'm not going into a holiday week, which is what we're doing this week, wondering what the markets are going to do the following week because something weird, something funky, maybe someone's tweeted something that they shouldn't, and oh shit, I'm long Tesla, and what have they done, and blah, blah. I've got none of that bollocks to worry about, none of it whatsoever, because I've figured out what I'm going to do, when I'm going to do it, why I'm going to do it, no matter who tweets what nonsense before the trade goes on. So when you find the extra stuff, the discretionary elements, the things that do have some subjectivity to them, did I draw the trend line right? Well, it doesn't really matter because I'm going to place the trade anyway. It's just that because you've got some extra analysis, what I refer to these days as, oh, and I see this other piece of information that might help support, increase my position size, tighten the stop up. If you're using stop loss, maybe I can use some extra fancy strategies, like with the Domino's Pizza example. We get all of these extra choices because maybe it gives you some extra confidence because of the extra information. Maybe it goes the other way. Maybe you just think, you know what, because of the extra analysis, I'm going to apply some conservative choices. I'm going to reduce my position. I'm going to have a wider stop loss. I'm just going to do a debit spread instead of a call, just because maybe there's a small target on the horizon instead of the bigger one that we just thought. You get to turn the dials on the production line. You can speed things up. You can slow things down. You can adjust your risk profile on that situation as a one-time adjustment. And then if you don't see any of that stuff on the next chart that you look at on the next opportunity, well, guess what? You're going to place the trade anyway. It's going to be the production line. The trade's going to go on. It's just from time to time at this point, maybe you see, oh, and I see something extra. Cool. Looks like, thanks for the comments, folks. It looks like everyone's getting it. Everyone's getting it. Right, let's hit the charts then. So, trend lines. If you've got a question, chip away. Everyone's getting into the habit of asking questions. That's good. So let's go full nerd on some charts. Let's do it. I've got a blank chart. I've got a blank chart ready. Let me just go here. I'm just changing charts because I've got a lot of notes and stuff on the chart. So here's a reasonable example. Here's a reasonable example. For me personally, average price is going up. It's been in trend for 40 days, the separated, etc. It's the classic trends that I like. Visually, it's going up. But maybe we can see something extra. Maybe there is a way to draw a trend line. We could possibly connect multiple lows together. Could. Now, the way that people usually draw trend lines, so I'm just very quickly switch on to trend lines. The way that people draw trend lines is they start at the bottom, and certainly this is what the textbook says, they start at the bottom left, and it has to connect all the lows and not have price penetrate that trend line. I don't think that's quite accurate, certainly not these days. So for example, they're going to start at the lowest low that they can see on the chart, which is over here, and that means that they're drawing that trend line as the first trend line. Then because the textbooks, which were written in the 1950s, this is what they used to do. And then I can take, okay, where does price start to push away? I can use that second point, and I can start to, again, I can't draw the trend line that way because that's what the Edwards and McGee said in the 50s, because price is penetrating the trend line. So I'm finding that point where there's no penetration. So that's the one I'm left with there, is the next tipping point. So I can't draw the trend line any steeper because that's what the stupid textbooks say when you start going from left to right. Now, what I'm proposing is that you start from the right side and work left as an alternative. Now, let's try and make it better. Let me just tidy this up a little bit. I'm just going to remove a few things. Bear with me. I'm also going to turn the moving averages off just so it's a little bit clearer. There we go. So we're trying to draw some trend lines. And again, that's what the textbooks normally say. We start from the bottom left and we go to the right. Now, what I'm proposing is, first of all, we go to the line chart. First of all, we go to the line chart. And I've just realized that may be a little bit too miscolored. So let me just change the color so it's a little bit easier to see. Line on close, green. Let's change that to black. Let's make it nice and thick. Okay, so that should be easy. So what we've done is we've gone to the line chart is the point. So I've gone to the line chart. And now that we've gone to the line chart, it's going to be easier to determine where my potential trend line can go. Now, what I'm proposing is we start off going from the right side and backwards. And in our mind's eye, we can draw, maybe use a straight line ruler. And we want to connect not 2 points, because any fool can connect 2 points together, as you just saw. I'm a fool I'm the king of the fools. You know what I mean? Anyone can connect 2 points together. And what we're looking for is 3 points of reference. So again, in my mind's eye, I'm thinking we could put a straight line ruler right there. And we've got 1, 2, 3 points of reference. That means that it's, for me, a more accurately drawn trend line. And it's a simple little thing, but when we've got 3 points of reference, it's going to make some of the trading choices a little bit easier. Now, the other thing I like to do as well, TradeStation's got this awesome little feature called Snap. And what I can do is I can snap it to the exact high or the exact low of the bar and it's just not playing ball with me now. I think it's just because I've changed the thickness on the line. There we go. And I can snap it there. Now, what that's doing is it's snapped exactly to the low, or the low on the line chart. Snapped it exactly to the low there, snapped it exactly to the low there. And that means that we do have a touch point there. So I know that it's accurately drawn. So I'm using line charts. I'm making sure that it is exactly at the low of the trend line, and we've got 3 points of reference minimum. Now, when I do that, it means that the trend line, as far as I'm concerned, is accurately drawn. If I'm looking for a trend line break or a trend line reversal, this is as accurate as I can draw it. Now, the other feature that we get to use with trend lines is, because I've spent a few extra moments, and even just explaining it, it only took 2 minutes to do and explain, I can draw a parallel trend line. Now, because I've got one side of the trend, and to be fair, if we put the candlestick on, we'd actually have 1, 2, 3, multiple touches, but on the line chart, there's at least 3 touches. When we go back to the candles, you can see we've actually got, almost multiple points of reference, which is great. So let's just go back to the line chart for the moment. But what I've done is, because I spent a little bit of time just making sure that my slope of trend line is right. Don't worry about the angle, but just because we can change the angle by zooming in and out just for reference. So don't fall into that trap. But because I've got the slope of that trend line right, the angle is not necessarily important, but we've got it accurate for the chart and the data as you're looking at it. So what I can do is I can draw a parallel trend line. Should I choose to, I get to play around with that. I don't think we're going to end up with it, but I can then get away with 1 or 2 points of reference. And actually, now I'm doing it, that looks like a great point. And I would never, ever, ever thought of having the start points of the trend line there. Never, ever, ever. But I've got 3 touch points, and I can get away with being a little bit loose, a little bit sloppy, because what I've noted in my experience is that one side of the, in this case, we're drawing a rising channel. As it turns out, we've tried, so you're not always going to be able to do a rising channel, but just on this case, I was able to see it. We've got, 1, 2, 3, 4 points of reference. Now we'll just dissect this. I'm not going to ignore where the live price is, because it's not stopped and turned, but nonetheless, we're at the trend line. That's great. Draw the parallel. Sometimes we get it, sometimes we don't, but this time we do. And again, I've got 1, 2, 3. If I wanted to use 1 touch point, that would be okay as well, because I've spent time getting the angle of that trend line on the chart that you're looking at accurately drawn. Then I have that luxury of being less accurate on the other side. So the other side being the upper boundary. And again, I've got 1 touch point, 2, 3 touch points. And again, I would never, ever, ever, ever have thought of putting the start point there if I hadn't have gone to the line charts and started with the side that I could almost get a straight line ruler on. Now I'm doing that. I could look at the longer trends, and just in my mind's eye, I'm thinking I can connect a trend line to those lows. Does everyone see what I see? I'm not going to draw it just yet, but I'm thinking just in my mind's eye, and I'm not quite drawing an accurate freestyle trend, but in my mind's eye, again, but I'm going from right to left, right to left, right to left, right to left. So I'm thinking I can get a trend line there as well. And this is not necessarily something that you're going to see in any textbooks, because all the textbooks say start at the left and work right. And we've just figured out that that's going to give us this really shallow trend line. Price is very far away from that shallow trend line, and there's no trade opportunity. And already we're doing better on this chart by starting and going from right to left. So let's do that. Let's see if there's some, what I'm going to take my own advice, use the snap feature. That means that it's just going to snap to the low. So we want 1, 2. So there's 2 points of reference. Now on this occasion, again, I'm looking for I've potentially got multiple touch points. And in fact, I'm just going to drop it here for a second. Now that I've got started there, worked left, carried on going left, that's a little bit of a penetration. That's okay. It's okay to have a little bit of a penetration, but I've just stopped it there because when I was looking right, I saw that our previous start point was dinged. Do you see what I see? So again, we start here. again, just because I can segment it. Now, I think we could go further left. So what I'm going to do is, because I've got my start point for a previous trend line, I'm going to just leave that there for a moment. We started the second trend line here. I've ended it there. Now, what I can do is I can just right click and let's go extend left. And we're going to cheat a little bit. So I think we've got a good trend. So now I can say, well, I could probably bring the start point back to here. So let's do that. And let's see how that changes things. Let's do that. That looks perfect. So I don't need the extend left anymore, but I'm just trying to use the tools that we have. So I started again from right, and this was my start point on the right point, and worked left, left, went left again. We extended the trend line to left, but we could see that actually that looked like a great start point. That looks like a great start point. So now that we've done that, do you agree that we've drawn that trend line? Let me just make it thicker so that it's a little bit different. Let's just do, I think this is the main trend line. That big, thick trend line there. I think that's the most accurate trend line that we can draw right now based on what we're looking at. Do you agree? And if you don't, that's okay. I'll flip the microphone on. You can tell me why you don't agree. But does that make sense? Is everyone happy with that? Now, I'm not going to do this every time I look at a chart. I just want to make that abundantly clear. I am not drawing trend lines every time. It's going to start with, I'm going to place the trade. And then it's, oh, and actually, we've got a good trend here. You know what? In my mind's eye, I could draw a trend line there. I could draw one there. So we've got a few extra trend lines. I'm just going to take the upper one off for now. I don't think it's relevant for what we're doing today. But I've got a few choices for trend lines. Cool. I think that looks great. We've got line of best fits on both cases. We've got multiple touch points, at least 3. And on this lower, the thicker one, the main one, we've got, 1, 2, 3, 4. It's a little bit patchy here, I've got to admit. Price does penetrate there, but we've got clearly multiple touch points of our trend line. And that's it, at least 3. If you can get more, several, great. Now, when we put the candlesticks back on, bam, we would never, ever, ever have probably chose either of these places for trend lines. Never in a month of Sundays. And this is the thing that gets me. People, traders, mentors, YouTube experts, self-proclaimed people, they don't understand necessarily how the chart is drawn. All they're doing is regurgitating a textbook that was written in the 1950s. And in the 50s, you could use the extreme low, start at the left, finish at the bottom, go right without price penetrating. That's the generally accepted rules. And just with a little shift in perspective, we're going to start on the right-hand side. And let's dissect the chart a little bit. In this case, we ended up with 2 trend lines. It was very clear and obvious when we went to the line chart that we could draw trend lines there. It's very clear and obvious when we had the line chart on that they're the lows that we should connect. Now, if we try to connect the absolute low to the absolute low to the absolute low, we're going to get a very different angle. In fact, let's just do that. We're going to get, if we try and replicate the same thing, we know our start points. I'm going to do the absolute low at the bottom there, slightly different. But if I try to replicate this in some similar way, and I'm trying to do the can't penetrate. There we go. So it can't penetrate. So I end up with 2 points of reference, 1, 2. And if I try and draw a trend line in the classic sense, it can't penetrate. So it can't penetrate there. It didn't penetrate here. And obviously it's not penetrating there. So you could argue that there's not an accurate trend line because we've only got 1, 2 touch points. If I try and draw the trend line in the classical from left to right with no penetrations in the trend line, then it's impossible to draw, especially these days. I mean, the markets are still efficient, but sometimes you just don't get that accurately drawn trend line. So while it looks similar, let me just change the color so you know which one's which. While it looks, let's make it red. While the red line looks similar to the thick black line, it is very similar, but I don't think it's accurately drawn. It doesn't give me confidence. So I want to have multiple points of reference. I'm going to use the line chart. And again, taking my own philosophy, like that means that occasionally there may be a rising channel. I can draw a parallel trend line. So all I did was duplicate the line and I can drag that. I've done all the effort and the hard work. If I want to just look, oh, look at that. Look at that. If I want to use 2 points of reference, I can do it. 1, 2. Or arguably a little bit of a third one there. They're close together. But suddenly, I've got a lot more faith in that upper trend line than trying to freestyle, 2 points, 2 trend lines together, because we've got the angle of this right. That's looking good. And now I'm thinking, if I just wanted to, not look at any of the other stuff that I look at, I've got the most accurately drawn trend lines. We've possibly got a rising channel, a little bit of a trend line break here or reaction here. Price could possibly come down to the $35 level, and we can be buying the trend line support and see if it turns around at that level. That could be interesting. It might stop here. That'd be cool as well. Where's our target going to be? Retest of the high, back to the rising channel high. So from $40 to $45, again, just using trend lines, we could see if there's a reaction. Let's just zoom out a little bit. We could see if there's a reaction here off this minor trend line that we drew, because I think that's pretty obvious. I like that. Not usually such a trend line fan. But if price was to turn around here and give me my entry criteria, I don't think there'd be anything wrong with it and trade it up to the $45 level. Again, this is just with trend lines on their own. So let me pause there, and then I'll come back to how we slip it into our production line for the things that we normally look for on a regular basis. So is everyone happy with drawing trend lines? 1, flip it onto a line chart. 2, explore left to right and right to left. Drawing it left to right didn't make sense. Drawing it from right to left, we ended up with accurate trend lines. So it's not perfect. It's going to be one way or the other. I tend to go right to left as my defaults. And then if I can get the traditional left to right drawing with multiple touch points in a similar way, it's going to be one or the other. Usually it's going to be the right to left drawn trend lines for me. At least that's the way I see it. And again, we want multiple touch points. So number 3 is we want 3 times, at least 3 touch points, Any fool can connect 2 touch points together. All the automated softwares connect 2 touch points together. And then they filter in the background by looking for confluence, and it doesn't quite work. But nonetheless, this is an accurately drawn trend line. This gives me confidence. We can draw a parallel trend line. So number 4 is we can draw or explore parallel trend lines. I'm just going to do PAR for parallel trend lines. We can explore parallel trend lines. Sometimes we get it, sometimes we don't. On this occasion, we had 1 touch point there, and it caught that upper boundary there. So that looks entirely accurate as far as I'm concerned. And it's when I do stuff like this that I keep amazing myself. From the point of view of, not because of, I know how to draw a good trend line. It's just like, tell me that technical analysis doesn't work. When you see stuff like this, tell me it doesn't work. But the best way of using this is as an augmentation to the trade that you're already going to place. So what does that mean? Well, if you've been hanging around this weird sounding nasally guy, because I've still got a bit of a head cold, for any length of time, we use moving averages. Our usual scan is the 200 and the 50 period moving average. So the 50 is above the 200. That gives me direction. So I'm biased bullish because of a mechanical trend. The 20 is above the 50 period moving average. My apologies. The 50 is above the 200. My apologies. Visually, we can see that it's going up. There's our visual inspection. So the average price is going up, suggesting a mechanical trend. Visually, I can see that the chart's going up as well. Start to the bottom left, finish at the top right. Great. Now I can start knowing what to do next. Buy the dip. This is one of my 6 money making patterns. Buy the dip, sell the rally. Recognize prices in a range. Okay, buy range lows, sell range highs. Buy the break of range highs, sell the break of range lows. We've explored that in detail on previous sessions. But the visual inspection is looking for like which of those 6 blueprints that I look for. I'm expecting to see a bullish trend. I'm looking for buy the dip. Is it doing that? Yes, it is going up. Great. That means that any downward movement is a possibility to buy the dip. Now, what I'm looking for next, again, step number 3, is my entries, exits, stops, and targets. I'm looking for a buyable dip. Now, before I get there, we're going to apply our discretion. So we've got the choice to go, oh, you know what? Oh, and we've just spent some time doing it. We might as well use it. Discretion. In this case, trend lines. Oh, and I see trend lines. So before I'm looking to look for an entry, I'm going to go, you know what? I'm looking for an entry. Now, I'm going to have to kind of go back and forth between entry. Normally, what I'm going to look for, a buyable dip, is a bar that comes back to the 50-period moving average. So there's the 50-period moving average. So we're at the 50-period moving average there. Should price turn around and go back above, then that would be my buyable dip. So I'm really interested in Jefferies right now. This is the stock, JEF, Jefferies Financial. I'm really interested. Am I doing anything? Am I buying it today? Maybe not. But I've got price at my 50-period moving average. It's just gone below it. So this is what I'm now considering a buyable dip. I am super interested in buying here. Just like when it retraced here, buyable dip. Just like when it, again, just using the 50-period moving average, a buyable dip there. Didn't quite work out. Went back above there, buyable dip. Rally retrace, buyable dip. Rally retrace, buyable dip. Rally retrace, buyable dip. These are all opportunities when price comes back to the 50. We can use the 20-period moving average just for simplicity. I'm just referencing the 50-period moving average, but these are all buyable dips. We've got 1, 2, didn't work out, 3, 4, 5, all close together. You'd take one of those, you wouldn't take all of them. And right now we've got another potential buyable dip. Price comes back to the 50. When it turns around, I'm going to be interested. Now I'm going to apply. So that's what I'm expecting on the entries, the exits, the stops, the targets right there, number 3. But before that, because I know what I'm looking for next, I'm now saying, you know what, actually, I've also got some trend lines. I see something extra. Woot woot. So now I've got a little bit of extra prices in that short-term minor rising channel, but at the 50, at the trend line. That looks super interesting. Now, if price is going to respect the trend line, is how all the talking heads might refer to it, and price does turn around and goes back above my usual entry trigger, but because I've got some extra information and it's reacting off the trend line, maybe I'm going to increase my position size because I've got some extra information that says maybe the trend line traders are going to be involved in this day. I've got my classic trend trading setup, you know, what most of the big institutions use and look for. We're looking to use the moving averages to look for the institutional footprints, but maybe there's a crowd of trend line traders that are looking interesting. Now, what I can also say is if it comes down to $35, we'll have price at the 200, same conditions, we're at a moving average, and we're at the rising channel now that we've got it, rising channel low. I'll be making the same decision. I'm going to place the trade anyway, and that's what I was saying before. Again, I've got my mechanical scan, I've got my visual inspection, I've got my entries, exits, stops, and targets, but I'm applying discretion for the moment. And this is just making me think, you know, on my entries and trade management position sizing, maybe I can be more adventurous. Maybe I can be more aggressive. Maybe you see it a different way. Maybe you go, you know what, I'll use less position size on the minor trend line, but I'll use double position size on the lower trend line, the rising channel low. I don't know if that's a decision that you would normally make, but what I can start doing is saying, oh, and I've got some extra information that may give me, in this case, I'm a little bit extra confident now because we've done this. I may be interested in increasing my position size. I may be interested in doing 2 or 3 different option strategies that are available to me. If they're available to me, I can explore some extra possibilities because I've got some extra information. It's now worth spending 5 or 10 minutes on this stock because we've got extra information. I'm doing, in reference to the production line, it's not a production line anymore. It's now, we've got a custom build. Maybe I can, spray a different color. I can add some spokey dokies. I can do some extra things. I can enhance the trade that I'm going to place anyway by making a few adjustments. I'm going to turn a few dials, speed things up, slow things down, depending on how you view it. But I get to enhance the flavor of the trade because of discretionary analysis. I'm not doing this every time I look at a chart because of where I'm applying it in the sequence: mechanical, visual. If I see it discretionary, I'm going to place the trade anyway. It's already been determined. I'm just trying to figure out, can I maximize my opportunity? And that's the best way, firstly, to use discretionary analysis. And in this case, how to use trend lines to enhance the flavor of your trade. Now, someone posted Marriott earlier. Let's take a look at it. Let's MAR. Someone was saying Marriott. So let me just, I've got a few bits and bobs here. Bear with me. Let's just drawings. Let's get rid of it. Start with a blank chart. So while I'm just tidying my chart up, does everyone get that? Is everyone happy with it? So someone's saying Marriott, and Peter, you've posted General Motors. We'll take a look at that. So now we're looking at the charts. We can apply the process in a million different ways. Number one, mechanical scan. Ruben said, take a look at Marriott. That can be as simple as it goes. You could say, I heard an advert on the radio. It's a mechanical thing. It was out of your control. I'm not randomly doing it. It's not something that we can apply long-term consistency. But when you first start out, maybe you hear the advert for McDonald's. You know what? I think I'll just check out McDonald's today. It's at the back of my mind. Maybe we're hearing a lot of things about NVIDIA in the news. We hear certainly about the semiconductors. So maybe we're looking at the semiconductor sector. That's a mechanical evaluation, mechanical scan, because you're not looking at every stock every day all the time with it. You just, you know what? Semiconductors are in the news a lot this week. Maybe we just go and take a look at a few semiconductor stocks. Take a look at two. Don't look at all of them. Don't be silly. Stop it. Maybe just look at 2 or 3 of the leading ones. Maybe just go and look at the ETF, SMH, is it? Just because that's a mechanical step. Number 2, visual inspection. Just because a stock is being touted by talking heads, by Ruben, by the advert that you heard on the radio, maybe it was scanned up in your watch list. I don't know. But what are we looking to see? One of 6 money-making blueprints. It's either going up, down, or sideways. If it's going sideways, we're looking for 6 things: buy range lows, sell range highs, break of range highs, break of range lows. Buy the dip in an uptrend, sell the rally in a downtrend, and we've got 4 things to do in a range. It's in one of 6 money-making blueprints. That's it. So visual inspection, which one is it? Which one is this chart doing? Well, I think the clue here is we've got multiple crosses in the average price. We spoke about this in previous weeks. While it is going up, visually we can see that. I think it's also fair to say that it's in a rising channel. Again, just in my mind's eye doing it. Okay, let's just spend 30 seconds seeing if we have a rising channel, because if there is, I'm going to treat the chart differently to a trending chart. I'm going to treat it like it's consolidating, because it's just angled. Let's flip it over to the line chart. Let's get the, now we've done it. I'm going to start over on the right-hand side. I think that's the last low point there. So there's always one obvious point. I'm starting my low point there, and then I'm just going to go down to the left. Where do I'm just dragging it very quickly and doing it very rough initially. Where am I getting multiple? There we go. Where am I getting multiple touch points? Who would have thought that little shitty little higher low there was going to be a great start point? 1, 2, 3, 4, 5, 6. A little bit of a poke out. 7, almost 8, 9. 9 reference points. Why would I want to include the absolute low? I'm not going to get an accurately drawn trend line. Let me pause there for dramatic effect. If someone can imagine drum roll music in the background, maybe someone can even, ta-da, like a good magic act. I've just pulled the dove out the top hat. Oh, insanity, isn't it? If I'd drawn it from bottom left, let's do it again. Let's do it again. I did that quite fast. Most people are going to start bottom left and go top, and they go top right. And maybe that works. Kind of. 1, 2, 3 touch points. I think I like that one better because I've got multiple touch points. That gives me more confidence than having the start point there. We get 1 touch point. We had the 2nd touch point there. And almost the 3rd one here. So you could have got away with it. I think this one gives me more confidence. I've got more reference points. There is more data to support that trend line. That's what I'm pausing for dramatic effect for. Does that make sense? multiple touch points, there's always going to be a very obvious, that's where it should go. And for me, I think that's where it should go. Now I get to play around. Now I've got the most accurately drawn trend line that I could draw based on the data that I'm looking at. I can explore it. It's not something that we'll maybe leave on, but we're thinking that this might be a rising channel. In our mind's eye, it looks like there's one, but I don't know if you can see, but the upper boundary doesn't have multiple touch points on this occasion. Again, I'm just going to drag the trend line up, and I'm just keeping an eye on this here because that's where price is reacted from for the moment. So I'm just seeing where price catches the trend line. So all of them, I'm going to try it out. I'm going to try it. So all I've done is as I've pushed it up, I've just stopped it there. And looking left, we've got a huge, breaks through there, breaks through there, breaks through there. It kind of catches that little wibble there. I don't think that's accurate. So let's keep on pushing. This takes longer to explain than to do, as you can probably appreciate. Again, if I can get multiple touch points, that's going to be awesome. Ooh, now I'm doing it. Now I'm doing it. A little bit of a sneaky one, but just there. We've got touch point there. We've got a touch point there. I've got to ignore that, but we've got a little bit of a touch point there, touch point there, touch point there. I think that looks good. So one side is going to be really well defined every time. The other side is going to be rough as a badger's, insert your own expletive. But because we spent time on the obvious side, it was the low again. It could have been the high, but this time it was the low. So we spent time, few moments. We didn't spend 20 minutes doing this. We spent 2 minutes. We've only spent 5 minutes, even with Phil's whimsical attempt at humor and explanations. But we've got multiple touch points on the low. That gives me confidence to say, is there a rising channel high? Yes, there is. Great. Marriott is in a rising channel. Great. Now that's going to help me with my evaluation. So again, mechanical scan. Ruben said, look at the charts. Visual inspection. It's going up. It's trending upwards. On further inspection, and I can draw a trend line. And I can draw a parallel trend line. Actually, it's not trending. It's also ranging. It's an angled range. We already established that there was multiple crosses in the average price. That usually says that it's consolidating series, but it starts at the bottom left, it finishes at the top right. It is trending, but it is also consolidating. It's an angled consolidation. Let's call this a channel. So I've got to do one of two things. I've got to either call it a trend or call it a channel. I'm going to default to calling it a rising channel, which means that it's range bound. So now I know what to do next. One of the 6 money-making patterns. It's either going up, it's either going down, or it's in a range. Now, where is price in the context of the range? It's near, it's not quite at, but it's near the range low. So I'm going to be looking to be a buyer at the range low. Cool. If it was at the range high, I could look to be a seller at the range high. If price was below the range, I could evaluate for a breakout. If it was above the range, I could evaluate it for a breakout. It's not doing any of the other 3 things. It's nearest the range low. So I'm going to look for a reversal at the range low. One of those little V-shaped patterns that I like, the head and or inverted, the head and right shoulder of the head and shoulders pattern, a 1, 2, 3 reversal pattern. It's got several different names. If you're familiar with them, that's great. If not, it's going to look like a V. So it needs to sell off. It needs to rally. It needs to attempt to move lower. And then I can get on board, trading it from the range low to the range high. So my target would be the range high. It's going to help me construct my plan, this extra effort. My stop loss is going to be outside the range. So it's going to be super small consolidation for an absolutely potentially good reward on the target. Let's go back to the candlestick charts. And see if we can think about the trade. So it's not at the best location. I'd like to see it around about here. My risk is going to be that. My reward is going to be that. On the assumption that it turns around, I'm looking for something like that there, where it comes down, sells off, does that, entry above there. I want to see that here. So I now know what to do next, and based on what history has been telling me, buy range lows. And because it's got an angled bias, I probably wouldn't trade the reversal off the range high. I would buy range lows, which is what we've just explored, and explore the break of a range high, and just take 2 choices off the table because it's angled in this case. That's it. That's all I got, folks. Does that make sense? I will take requests for stock choices. I think we've had a look at Marriott's. Peter was asking about GM. Let's take a look at GM. Right, let's take a look at it. Now we're looking at the charts. What is price doing? Well, it's doing 2 things. So mechanical step number 1. Let's try that again. Number 1, mechanical step. This is actually in my universe. This would normally get picked up on my usual watch list scans. But nonetheless, Peter said, take a look at General Motors. I've been looking at it this week. Great. Step number 2, now that I'm looking at it, visual inspection. What's it doing? It starts at the bottom left. Oh, finishes at the top right. But now I've gone to the top right, just put my attention here. I can also see we've got 1, 2, 3, 4. I'm looking at the relationship between the 20 period and the 50 period moving average. The 50 is also crossed below, and it's just about to cross back above. So we've got multiple crosses in average price. As we've said in the past several weeks, that can be an indication of a consolidation. Okay, so it starts about when I've finished the top right, but in the short term, the last 6 or 7 months, it looks like it's going sideways. So it's doing half and half. Right, let's not worry about where the boundaries are. We can look for, surprise, surprise, just like we did with trend lines, multiple touches of highs this time, multiple touches of lows. We all agree, multiple crosses in the average price. It is ranging at the time horizon in the last 6 months at least, or maybe 8 months actually. What day is it? Last 11 months. Phil, check the calendar. Sometimes, just like with trend lines, there's going to be multiple touches. I don't see multiple touches. So let's not worry about where the exact highs or where the boundaries are. Let's just recognize it is in a range. Let's just contain price. I'm going to put a giant box around it. It's going to be rough around the edges. I can finesse and fine tune a little bit now. I've done that. That looks good enough. That is my range area. I'm not worried about the pennies. I'm looking to profit and make dollars. So I don't generally worry about that 1 or 2 pennies. It doesn't have to be exactly at the range high or at the range low. It's a little bit rough around the edges. Sometimes we get pinpoint precision with boundary levels, the range highs, the range lows, the trend lines. In this case, we've got a horizontal low, a horizontal high. I don't really see multiple touch points, just like we use with trend lines. I don't see it, but we don't need it because we've already recognized that price is a statement of fact ranging as determined by the multiple crosses in the average price at a relatively same level horizontally and a close level vertically. So it's ranging. So now that we know what to do next, price is in a range. I'm going to buy range lows, sell range highs, buy the break of range lows, buy the break of range highs. They're my 4 choices. So which one is most imminent? Well, where is price? It's at the range high. I've now got 1 choice. It's at the range high. My choices are to be bearish at the range high and profit from a downward movement to the range low. That's it. When you've got structure, mechanical, visual, it's one of 6 money-making patterns. Look at, charts, which one are we looking at? Peter said, take a look at General Motors. Visual inspection, what's it doing? Is it making one of the 6 money-making patterns? Yes. When we looked at further details, actually, we changed our mind from trend to range. Entries, exits, stops, and targets. Trade management. Entries, exits, stops, targets. But at the range high, I'm going to be bearish. I've got to be bearish. Until something new happens, I've got to be bearish. I'm going to profit from a downward movement in the stock. I'm looking for a V-shaped pattern, head and right shoulder of our head and shoulders pattern. It looks just like that there. Find an example. I'm looking for that to happen over here. Great, that's what I'm waiting for. It's not developed yet. It's not a today trade, but that's what that's what I'm looking for. When that happens, taking the trade. I'm going to take the trade on from the range high. My risk is going to be probably that much. My reward is going to be that much. That looks like a good trade. That's it. That's all we're doing. But it's because we've got structure, mechanical, visual, 6 money-making patterns. When I know that, I'm going to place the trade. Now I can look for entries, exits, stops, and targets. Great. There's the trade plan. While we've got a bit of freedom, a little bit of flexibility, And Peter, is that awesome analysis? Thank you very much for your kind words. While you've got me, is there one more that you want to look at? We can go through the structure, go through the process. FL, I thought you were typing fights, fisticuffs. FLGT is the next suggestion, also from Peter. FLGT, let's take a look. FLGT, wouldn't touch it with someone else's barge pole. This has got pump and dump written all over it. This would not be in my universe, firstly. We know that there's a lot of meme stock nonsense in January, February. It's gone from flatter than a pancake to, oh my giddy ants, exponential. Several stocks did early in the year. So that just tells me it's probably got caught up in the meme nonsense. I don't know who the stock is, Fulgent Genetics. So it's going to be a little bit more spicy to trade anyway. Again, first time I'm looking at the stock, it's not in my universe. Why is it not in my universe? I'm looking at volume. The average volume is about 40,000 shares traded per day. I don't know if it's got options. I've not checked, but this would never be something I would trade because it does not have liquidity. Liquidity for me is a minimum of 1 million shares traded on average every day. This little blip here where it went up to a few million, yeah, whatever. But I want to see a steady average of millions of shares trade. This is what pump and dump looks like. You've got nothing, nothing, nothing. But let me zoom out. Nothing, 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 flat, 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 nothing, 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 flat, 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 penny. Look at the scale, penny. You know, it's like a $10 stock, $5 stock. Just in 2019, flat, flat, flat. Ooh, exciting. Flat, flat, flat. Ooh, exciting. This is pump and then exponential. That's what the pump looks like. That's what the dump looks like, and nothing afterwards. That's not a great swing trader. It's not what I'm looking for. Don't get me wrong. I know people who make good money from specializing in pump and dumps. It requires screen time. That's a trade-off. I don't want to do that. It requires looking for low floats, doing analysis, doing research. It requires me maybe looking for some headlines, trying to figure out some company reports. Maybe I'm trawling Wall Street bets to get some suggestions. Maybe all these shoulda, woulda, couldas. I can't be fucking asked with that. I really can't. It's too much effort. I'm at the point, as I mentioned right at the start of our session, I would just want to go, there's the trade. There's the trade right there. And this is how we do it. In fact, maybe it's a good place to finish. I want to go, there is the trade. Yeah, I mean, one of the things that I frequently say at the moment in our twice weekly accelerator group is, like, make it easy. Press the easy button. Like, press the easy button. You can make additions, you can pick it up elsewhere. As long as you've got extra information, you can be a little bit flexible. This has been a good trader. There are millions of shares traded. It's got options, which is the other thing. They're pretty liquid. So yeah, I've realized I'm just calling myself a hypocrite, aren't I, Scott? It's not in my universe. It trades well. I can show you the algorithm that I use. I think I can't remember if you've got access to it, but like, I can pick it up elsewhere because it's got historical performance that justifies being interested. Like, Domino's Pizza is a good trader. And this is the algorithm. This is over since 2004. This has a steady equity curve. So we can be forgiving if you're going to take something out the equation. In this case, a typical average of 1 million shares traded. What am I putting in its place? The historical performance is absolutely awesome. In the last 17 years, it's got a steady equity curve. In the last 17 years, if I just traded $1,000 on every trade that's set up without thinking, just put the trade on when it sets up, don't try and be clever, $1,000 in, $23,000 out without compounding. Without compounding. It's profitable 49% of the time. It's got a profit factor of 2.0. So it's not just the win rates. Like, I've got a high expectation that this is a good stock to trade. I've got a high expectation that if I put $1 in, I'm going to get $2 out. That's what that profit factor is saying. I put $1,000 in, I'm making $23,000. The next thing that I'm looking at is, what does the equity curve look like? Is this going to be painful? Is it, win, 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 and then crash low, win, 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 crash low. I don't want that. I'm looking for, in the last 20, well, as much data as possible, is there a steady equity curve? So yes. So I can be forgiving, and I've got to admit, you can be flexible, Scott, but I'm not just being flexible for the sake of being flexible. I'd like to trade Domino's Pizza. I've got a fucking good justifiable reason for trading Domino's Pizza. It's one of the better historically performing stocks over the last 20 or so years for my style of trading. Does that make sense? You understand? Again, I kind of like stressing the point a little bit, maybe, well, in my usual fashion, maybe overstressing the points. But if you're going to take something out of your, like, what should be in my universe, you've got to have a bloody good justifiable reason. And you can get away with it, like with fundamental analysis. I mean, the other stock that was mentioned, if you've got a good fundamental reason, a fundamental hypothesis, I like this stock because of this, 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 and this. The volume's a little bit shitty. Well, it's still a good company. It's just, I don't want to think about the other things as standard. Now, when I've got this strategy coded off, I've also got a third strategy. I'm teasing everyone with it, but I've got a third version. It's going to be more accurate, more in line with what we spoke about today. This just looks for the, just for reference, all my insiders will know the conservative entries on the range rider strategy. So it's looking at the latest possible entry that we could take where there's nothing else to wait for. If you just took those trades, that's what it's looking for. The next one's looking at getting the programmer is, sorry, I'm talking with him right now. Not right this second, but, you know, I'm in talks with him. But it's going to be more like the classic trend trading setup. So I'm getting that coded up. So we'll have more data. So, well, sorry, the latest version of the strategy coded up because we've made a few adjustments since the last time I had coded up. So we'll be able to go through the universe of stocks and say, like, is this a good stock to trade? Is this a good stock to trade? Does this perform historically well? That's what I'm looking for. That's what's creating my universe of stocks. Again, if we go to my active universe, that's how this list of stocks is done. I've ran the algorithms that I've written into, you know, through the 2,000 stocks that are liquid. They have options that typically, you meet all my pre-flight checks for, should I look at this stock? The volume is one of those. Few exceptions to every rule, but there's justifiable reasons in that it's one of the better performing stocks historically. So you can be a little bit flexible. If you're going to take something out of your usual process, you need to put something in its place. It could be fundamentals. It could be Dow 3, GAN 3, LOA 3. Maybe you want to trade Domino's Pizza because of X, Y, Z. But all of these stocks, I should be able to just place the trade because the trade's set up. And historically, it's a good stock to trade for this style of trading. It swings nicely, and not just as a one-time thing because of all the nonsense and weird shit that's going on at the moment. Like in the last 20 years, Apple traded really well. In the last 20 years, Halliburton traded amazing. In the last 20 years, Domino's Pizza was awesome. In the last 20 years, Logitech was amazing. There's a reason for that. They're good swinging stocks. Even one of my favorites, what is it? Not Weight Watchers. I can't remember the name. Like Tupperware. Boring Tupperware. It's been around since the 70s. Tupperware is a good historically trending stock. It's boring old Tupperware. I think I'd rather trade that consistently, regularly, methodically for the next several years than try and get lucky on a pump and dump once or twice a month. Personal preference. That's what I prefer. If that's what you're looking for, I can point you in the direction of some great people who teach pump and dump styles of trading. That Timothy fellow is one of them. If you've heard of the guy that I'm talking about, like, that's what he teaches. You know, he teaches that particular style of trading. It's not for me. I don't want to do it. I don't want to spend hours researching, which is the trade-off that's required with that style of trading. Similar with day trading. I don't want to day trade anymore. I spent 12 years doing it. I don't want to do that anymore because the trade-off is time at the computer. I've got a way of doing it where I'll augment my swing trading with the occasional day trade. It's the cherry on the top of everything else that I do, but it's not the main meal. It's not the main course. Anyway, I'm kind of bullshitting back and forth now. Let's get back to it. Let's finish off. We're a little bit over time today. Thank you very much for your patience. Thank you very much for your tolerance. What was your biggest takeaway today? So where are you? Where you're at? These are from last week, so let me just tidy up. What was your biggest takeaway? Was there anything that just resonated with you this week? Let me know. I'd love to just understand where you're at. I'd also like to say, if you'll be patient with me, I'd also like to spend just a few minutes talking about something else. It'll explain why I'm always encouraging interaction. It will explain why I'm always asking these questions. I want each and every one of you to get the most out of these sessions and to go and do it. So I'm asking these questions for a reason. And if you'll bear with me, the reason is this. So I truly believe that the best way to learn how portfolio is managed is by seeing it being done. But are you on the right path? I'm trying to kind of put some layers on this and doing a little bit of digging around, doing a little bit of research. Most people go through the do-it-yourself routes, and that's great. It's the route that I went, and it was, looking back on a 28-year career, it is the hard path. But the DIY routes, if you just simply listen today and you don't get involved, and you are almost looking at the education and training that's out there in the world, the YouTubes, the podcasts of the world, these live sessions that we do, if you're just sitting there listening like it's trader TV, then your retention is only going to be 5%. You're only taking in a very small amount. You're going to lose 95% of what you got out of today's session because you were very passive and just listening. And that's a fact. You can go and fact check these stats, but these are widely accepted. Again, the DIY route, if you're simply reading the lessons, maybe you're a more visual person, and book learning, maybe it's 10%. Now, for me personally, I feel that like audio and listening, like I feel my edge is a little bit on the listening side than the reading side. Just one of those things. There's a little bit of flexibility in here. Just keep that in mind. But reading, if you're just reading and trying to learn from books, which again is what I did, I remember dragging my eyes through 1,000-page tomes of books, mathematical formula. I don't remember any of it. I literally could just put the book down and just go, I didn't know what I read. Your retention is minimal. Again, you're going to lose 90% of what you learn out of books if you're not putting it into practice. Audio and visual learning, again, this is where we all start to resonate. We've got the audio and the visual, the text and the charts, the visuals. Like today here, you've got a little bit of audio with the slide, a little bit of visual with the slides, a little bit of audio on me. So your retention on these types of sessions, they should be higher, but you're still going to have 80% of what we've learned here today is going to be lost. Now, this is where the magic happens as far as I'm concerned. When you get help, you accelerate your growth in the fastest possible way. So what I try and do with my all my insiders in my accelerator group, the group program that I currently have, is you get demonstration from an expert. And in some small way, you've got that today as well. You're seeing me demonstrate what I'm doing. But if you're not putting it into practice, you're going to lose a lot of it. So if you remember, like one of the things that I'm always going to ask everyone to do at the end of the session is just put it into practice. Go and practice what you're doing. And it's for a reason. If you don't practice what you've learned today, you're going to lose 70% of everything. You're going to lose that comprehension. You're going to lose that understanding very, very quickly. So put it into practice as quickly as possible. Now, other benefits of these types of group environments, again, another reason why I want you to be interactive, I'm trying to encourage discussion. It's the benefit from the mastermind, the collective brain that we all experience by being even in a virtual room together. If you are discussing it with me, with each other, maybe you're in the Slack community. Again, if you're not in the Slack community, come and join the Slack community. You can go to the community, come and join it, come and discuss, come and be involved with other traders, other like-minded people, because when you start talking about what you're learning and the markets, the charts, how you're viewing the environments, the opportunities that we're looking at, you're going to start to retain 50% of what you're learning. And you're going to be able to apply it more consistently, more methodically, because you're being intentional about what you're doing. You're not only thinking about it, but you're talking about it. You're starting to experience a whole mind experience rather than just read it and think it, read it and think it. If you read it, think it, talk it, say it out loud, explain it to someone, you're going to start to see retention. If you leave it a few days and passively practice what you'll learn, it's still going to be good. You're going to remember about 75% of it. You're going to experience some growth. It's certainly better than not doing anything, but you will have some lost retention. But passively practicing what you learn, again, be intentional about it. Like dedicate some time. If you immediately after today's session, go and practice trend lines for 20 minutes. Go and practice what I'm teaching you. Go and practice the scanning. Go and practice looking for buy the dips and evaluating the charts. Because if you put it into immediate practice, you're going to retain 90% of what you're doing. So immediate practice. I do this on Wednesdays with my group. We put it into practice. I have everyone do what I've just done to you. I pitch you a trade idea. We go through the process. We go through methodically. And I also offer course corrections, like maybe how you've interpreted it. It could just be a verbal typo, as I like to say. It might be just a little bit of fussy use of wording, but I'm just trying to put some more meat on the bone, as it were. I'm trying to offer course corrections from an expert who's already traveled this path, who's already made all the mistakes. It's the fastest way to learn anything. And again, I always compare what we do to learning how to drive. If you think about how the fastest way you've learned a skill, and for most people, learning to drive is the fastest thing that they've learned. It's because you're being taught by an expert, you're seeing it, you're being talking about it with your instructor, and maybe you're talking with friends about it, because maybe you've got several people as a young person, you might have all going through that same journey together. So you've got that kind of like mastermind experience with all the people who are around you learning how to drive at the same time. From your instructor, you're getting course corrections, how to shift the gears, how to accelerate safely in traffic, and how to drive the road safely in traffic, and not bump into people and crash people. When you do that, you learn and accelerate in your growth as a driver. There's a method in the madness behind accelerated learning. And this is what I'm encouraging you to do, hopefully in these Friday free sessions, as well as in my private closed room sessions in my main groups. But this is why I'm trying to get you to interact. This is why I'm trying to demonstrate to you. This is why I'm trying to get you to encourage you to be involved as much as possible, because you're going to start seeing results. So that's my kind of reasoning why, and hopefully it just explains why I'm doing things in a certain way. So I want to come back to asking you, what's your biggest takeaway? Practice makes perfect. Thank you, Randall. Practice makes perfect. So that makes sense. Like there is a method in the madness. There is a method in the madness. Ian, thank you, Randall. Lots of madness. There's always lots of madness, Randall. So practice makes perfect. I think that is several people saying the same thing. Awesome, awesome, awesome. Again, we're over time here. We're over time. Group sessions. Oh, awesome. Thank you very much, Steve. Really appreciate your, again, if you get involved, you get your name on the board. If you get involved, you get the name on the board. Thank you very much, Steve. The group sessions certainly do help. Awesome, awesome, awesome. Again, what you'll probably start to see is you'll start to speed up. The learning starts to speed up. Again, even if you're not always asking a question or you're not always getting involved, you can benefit from other people asking similar questions. And that is some of the benefit here. So again, if your level is just at the free level and you don't want to be involved in the more personal support, that's okay. There's no pressure. But just get involved. Take advantage of the opportunity that you have for you. I absolutely love what I do. I am the type of person that stops tourists to see if they need direction. So I'll give as much as I can for as long as I can. But if you do want more attention, more personal services, as it were, then you can work more closely with me. Again, I've never been shy about it. There is a commercial intent warning. You are invited to work with me, but you're paying for my time, you're paying for my expertise. Again, I'm never going to shy away from that. But if you want that attention, it's there. But for most people, they get enough out of these free sessions. So if you do want to work more closely, then when you're ready, let's do it together. I've been doing this now, coaching people since 2003 officially. So I've been doing this a long, long time. I've got lots of success stories over the years, and hopefully from these sessions you can see that it can be simple, it can be straightforward. Again, it's not easy, it just becomes easier when you've got structure. So if you'd like to be involved, you can go to my main website, or you can go to Production Line Trading. That'll redirect you. I appreciate not everyone might be able to write it down or click a link, but productionlinetrading.com, that'll redirect you to my main site, just in case you're listening to this or you're watching this on the replay. Awesome. Thank you very much again for your kind words. I think that's a fair comment, Zeke. Yeah, the minimum fee for these sessions, I might swipe that phrase. The minimum fee for these sessions is interaction. That's it. It makes it far more pleasurable for me. And as Randall said, it's well worth the guidance from those willing to learn. Absolutely. Thank you very much again for your kind words. That's a good place to stop. If you need some help, just know it's there. I'm tempted to go all Hogwarts, and help will always be provided to those who ask. I don't know. I'm a nerd when it comes to that. Anyway, thank you very much for your time. Thank you very much for your attention. Where are we? There we go. So thank you very much for your time. I appreciate we've gone a little bit over today's session. Hopefully it's been well worth it. We've taken a deep dive on discretionary analysis and specifically trend line usage, and just a very different way of looking at trend lines. The traditional way, I never got it to work the way that I expected, the way that textbook said, but the slight shift in perspective just made all the difference. So hopefully it's been valuable. Hopefully it's been useful. It's not something that you need to use every time. It's discretionary. It's an and when you see it, it's obvious. Okay, now I can explore it further. That's the best way of using it. It should augment the trade that you're already placing. It shouldn't be the only thing that you're looking at to place a trade. By doing it the way that we did it, you should be able to zero in on a good opportunity and enhance it with discretionary analysis. So again, that's a little bit of a roundup, but nonetheless, thank you for spending time with me here today. Appreciate we could all be doing other things, and thank you very much for spending it with me. Rodrigo, thank you for your kind words. Randall, Peter, Zeke, thank you all for getting involved. Steve, Ruben, I hope your back's feeling better. We'll speak to you soon about that. Peter, again, thank you for being involved. Mark, Linda, hello, Linda. Hello, GE, Duncan. Oh, hello, Duncan. Not spoke for a while. Al, Adrian, and of course, Ian lurking in the background. I see you there. Awesome. Thank you all for your time. Thank you all for your attention. That was the Free Friday workshop. Have a great weekend. Not sure about next Friday, if I'm going to be honest. Going into a long weekend, I'll play it by ear. But nonetheless, whatever you're up to, I'll see you next time.